right? There's an opportunity when this federal estate tax, like I mentioned, is big. You want to take advantage of that high exemption, and you can avoid state estate tax by making gifts to these SLATs. And then remember that 3-year rule I talked about? So long as you survive 3 years from the date of the gift in New York State, you're not going to have a gift tax on it, and it's out of the estate. So it's fantastic, right? It's not like you're using, like for federal purposes, there's that unified gift and estate tax. If you make a gift for New York State estate purposes, after 3 years, that's not part of your estate anymore, and you haven't used your exemption. So it's a great thing, right? So it allows you to draft with flexibility, like I talk about. You can swap out part assets to have equal value. Consider basis issues, right? So this is a gift. When you make a gift to a trust, you're gifting your basis of the asset. So if you make a gift of stock that you paid $10 for, then the trust will have a basis of $10. Even if the stock's worth 100, the trust basis is still 10. So that's something, it's called carryover basis. So when you have a trust like this, that's something you need to keep in mind. So let's do an example, right, of how you can save money in your New York State estate tax by using a SLAT, right? So for currently, the New York State estate tax exemption is $6,580,000 per person. So say, for example, by using a bypass trust, a credit shelter trust, and no SLAT, in 2023, you have a gross estate of $12,920,000. You use a bypass trust, which is the federal, which is this New York State exemption. So you fund your bypass, also known as the credit shelter trust, to the full amount of your New York State exemption. You're going to have a taxable estate of $6,340,000. And then the maximum rate that could be taxed at is 16%. So let's look at it instead if you did a SLAT and the credit shelter trust, right? So same number of a gross estate, you use a SLAT for the amount of the exemption, then you have what's left in your estate, and then you have your exemption, which is more than what's left. So now you have no tax, which is great, right? Presuming, of course, you live the 3 years from the gift. This is a great way when you use the SLAT and you have your exemption, a perfect way to save on estate tax, right?